There's an old phrase which was used to describe the gold rush of the Wild West, that you didn't make millions if you were the person digging in the ground for the gold. Indeed, you were the one that made millions if you sold the shovels to the guys digging in the ground for the gold. And it does make me think about the modern state of the gold and silver markets that we're in. Are we in this bit of a gold rush? Well, arguably, yes. I think we are in a bit of a gold and silver rush, especially with the prices having come down over the last week. But really, are we the ones that are going to make the big money out of buying gold and silver? I mean, that's what you would believe if you go and watch a lot of different videos on YouTube right now. And the dip, oh my goodness, buy the dip, buy the dip. But actually, really, the dealers, the sellers, those out there that can capitalize on the movements in the prices, they're the ones that are going to be making bank. They're the ones that are going to be making millions, not us. And for those people who bought at the beginning of the year when this hype was happening, when the gold rush, when the silver rush was happening, they're sort of left holding the shovels with nothing else to dig for. So what can we learn from that? What can we as individuals, as investors in precious metals, learn from that to maybe make us not get rich quick? That's not what gold and silver is about in my book, but learn from this stuff and how we can better understand the future of our investments, the future of gold and silver, how it relates to our money, how it relates to profits and the cash that we have in our bank account. Hello everyone, I'm Backyard Bullion. If you haven't watched one of my videos before, I like to have down-to-earth discussions about all things precious and shiny. I'm not a professional bullion dealer. I dabble here and there, selling little bits and bobs from my personal collection and helping other people find buyers. I've been doing it for 10 years. I kind of know what I'm talking about, but I'm also not on the inside of the bullion industry. But I have talked with a great deal of different bullion dealers in my time. And there are some good ones and there are some not so good ones out there in this world. And picking the good ones from the bad can be a little bit of a daunting task. Now, when you find yourself a good bullion dealer, often you find, yes, they're going to be making money on anything that you buy. And that's just part and parcel of doing business. But the problem is when they take advantage of you. And that can happen far too often, certainly in this modern world. And there are plenty of examples of unscrupulous, what I would call bullion dealers who sell you touted up tat, whether it be coins that are just hyped up to be more than they actually are, perhaps pressure sold to people, or whether they're just really high premium coins that the people who make them think are wonderful and marvelous, but actually at the end of the day should really be just treated as that kind of bullion style investment. So the types of things you buy and where you buy it from are really, really important. Now, what I will say is that there are a lot of really good bullion dealers. I'm not being sponsored in this video to make particular aspersions towards or against different bullion dealers, but I will mention the ones that I buy from all the time. Chards, Atkinson's. I've also bought from Tavex. I've also bought from, I have bought from Bullion by Post once in the past, but a lot of people buy from Bullion by Post. They're a good company. They tend to be a little bit more on the expensive side, compare and contrast. Some things they're cheaper on than others, that's what I would say. There are plenty of others that I've bought from in the past, too many almost to name, but the point is that we as consumers kind of are left with just that one choice of buying from bullion dealers if you want to be really safe. Now, there are plenty of other individual bullion dealers out there that you can buy from. Oh, you can shout at me all you like in the comment section. They're just gold bullion sovereigns at the end of the day. But there are plenty of different individual traders that you can buy from through social media, and you can often get a lot better pricing than you can from those big dealers. Oh, I haven't even mentioned the Royal Mint. I do buy from the Royal Mint, or I have bought from the Royal Mint in the past, as you can see with these Trial of the Picks products here, which are in the world's most ridiculously sized boxes, but still pretty nice products. And when you can buy them for a cheap price, then your quid's in, really. But yeah, so you can buy from individuals, definitely, and you can get good prices on things, but just be careful with that kind of purchasing. But where it comes down to it is that when you are buying from anyone, whether it be an individual, whether it be from the Royal Mint, or whether it be from a bullion dealer, like one of the really good ones, Chards, Atkinson's, Tavex, there are lots of others. Blyer Bullion are really good. I've bought from them before in the past. I'm probably missing a whole bunch out, but there are lots of really good ones. Positive buying experiences from them, from lots of different people. They're making money on it though. That's the ultimate part of it. Whether it's a brand new piece of stock, which, I mean, again, if we go back to the Royal Mint side of things, you can buy stuff made by the raw mint from bullion dealers cheaper than you can from the raw mint, which never made sense to me, but basically it's because the raw mint wants to make money. The raw mint wants to make as much money as they can off you, the consumer, and that's the same thing as any business. And look, being in business is hard. I'm in business, and certainly when prices go up and down, it's hard to make profit, and it's hard to sustain that profit. You have to have quite significant bankrolls to sort of hedge almost, and to restock immediately once you've purchased or once you've sold a bunch of stock, to really kind of get that picture of where your business is. And then the idea is at the very end of the life cycle, hopefully at some point down the line, you've built up a very large asset pool, which perhaps you'll have, and then be able to, hang up your selling. Well, I was going to say shears there for a minute, but you go swords to plowshares, and you sort of stop selling and you just rest up those laurels and sell up, and you're happy and you've got everything you need. But ultimately, if you're an individual, buying this stuff isn't a get-rich-quick scheme. We're not here to get rich by buying gold and silver. And the problem is it's linked to money, to real cash, to physical fiat currency, money that we use every day in our bank accounts. And so often, I've been guilty of it, and I do it, in fact, all the time. Talk about profit, and I've got two hats on, because I've got my trading hat where I'm a business, and I've got to obviously have bills to pay, got to have money coming in, money going out, tax bills to pay, and the like. But ultimately, money that's in the bank account really means nothing. And if you disconnect from that way of thinking, and you think about gold and silver as actual real money, as stuff that will actually yield you something over a long term, then actually you disconnect from this sort of almost zombie-like state that the world is in right now. People don't know that every year they hear these prices for inflation. We just had some inflation figures out last week for the US, 4%, above 4%, I think. Is that really the true indication of inflation in the US? I don't think so. Gas prices, petrol as we call it here. Why would you call a liquid gas? I don't understand. Explain to me down in the comments, you American people. Why do you call a liquid gas? Doesn't make sense. Anyway, but that hasn't gone up by 4%. It's gone up way more than 4%. But average inflation, they say, is at 4%. Here in the UK, it's a little bit lower, but possibly going to be higher in the next couple of weeks and months when we get our figures out. It feels a lot more than that, if I'm being honest. Everything's got more expensive, and in the last sort of 5 years, really since COVID, I've noticed a pretty much doubling of nearly everything. You go to the shops, and it seems every week now that things are more expensive. You put things in a basket for your shopping, your weekly shop, and it's gone up. There are certain brands here in the UK that you go to shop at. I won't mention them, but they're the higher end shops, the ones where people get, Grand Duchy chicken for £29. Yes, I'll definitely have one of those for my dinner. And it's like, really? We're spending that much money on a 1.5 kilo chicken now? But, even in the cheap seats down on the bottom shelves of these fancy supermarkets, you're still spending sort of £8, £9, £10 on a chicken, whereas a few years ago it was £4 or £5 for a nice chicken. And, that's pretty scary, really. Certainly scary for me in terms of being a father, being a parent, looking to the future, where money will be, how will people interact with money in the future, how will my kids interact with money, will they even be able to it's awful, because the generation before mine was of the generation whereby you could have one person working and you could still afford everything. You could have a house, you could have a mortgage, you could you could have luxuries, you could have a car, you could go on holidays once a year or more sometimes. Now everybody's on the breadline. Two people, you hear it all the time in various different talking radio shows, people calling in combined household incomes of over £100,000, but they're struggling to get on the housing ladder. They can't afford a mortgage. They can't afford the deposit. They can't afford childcare. They can't afford food for the kids. Going out for a meal is a luxury now, and it never used to be. I remember when we were kids, we'd be going out for a meal, not every bloody night or anything, but every week or so, we'd try and go out for a family meal, because it would be nice. It would be fun. It'd be something to do. Take the burden off having to do the cooking and the washing up. But now it seems if you go out and you're spending, £20-30 per dish per head, suddenly you go out with a family of 4, and that's quite a expensive meal out. And not a lot of people can afford that right now. Or if you can afford that right now, even if you can afford it, it feels expensive. We're in this luxury where, we still can go out to eat every now and again. But when I sit down at a pub restaurant, I look at the menu, and listen, I'm not trying to begrudge the pubs for this, because it's not the pub's fault. And I will countenance this by saying that I'm all for supporting local pubs, and I don't mind going and spending £25-30 for a main dish at a pub that's local to me, that's sourced local produce, British produce. But what I have a problem with is you go to one of the big supermarkets and you buy something that, used to cost £5 now costs £10. And that doesn't make sense to me. And it's because we've lost the buying power of our money. And so the real test is whether investing in gold and silver, buying gold and silver, will preserve that money. And I do think it will. I think that's the ultimate goal of it. But unlike bullion dealers, unlike selling the shovels to those in the gold rush, we're not the ones that are going to get rich by buying this stuff. You need to disconnect that thinking from all of your way of thinking for gold and silver. The companies and people that are going to be making money right now are the bullion dealers. I say the Royal Mint, even though they made a £39 million loss last year. It would be very interesting to see where they come out this year. And fighting for that small chunk in that world, in that big picture, can be really competitive. And unfortunately, there are a lot of people there are a lot of traders, a lot of individual traders, a lot of big companies that kind of shortcut it and just kind of sell their soul to, basically give the middle finger to the consumer, to you. Whether that be on really horrible fractional silver items and gold items, those 1,000th ounce bars from, mints in the UK that are named such to instill like they've been around for thousands of years and they hark back to old British times, but actually they've literally been set up a few years ago to take advantage of you, the consumer, who wants to spend £10 on a 1,000th ounce gold bar, which is worth like £2, and they're making bank. They are making millions out of this. They really are. Those are the kind of things and products that you should avoid, because ultimately you're never going to make money on them. You're the one toiling in the gold mines for scraps for those 1,000th ounces, when the company that's selling you the shovel, in other words, the packaging that it goes in, because that's ultimately what they're doing. They're taking a tiny piece, it's like the Royal Mint, they're taking a tiny piece of gold, they're putting it in a fancy box, and they're trying to charge you a premium for it. And I've said for a long time that the likes of the Royal Mint and others, it's not just the Royal Mint here, but the Royal Mint especially, they charge a lot of money for the boxes that they sell the coins in. And I've got a coin here as a prime example. So this particular coin is the Trial of the Pix coin for the the 75th birthday of His Majesty King Charles III. Okay, so basically this coin, Trial of Pix, if you don't know, it's basically a really old tradition whereby the Royal Mint submits their gold coins for inspection, and they get looked at and they get handled, they get tested, made sure they're all genuine. So then what the Royal Mint does is they take these now imperfect coins and they tart them up, put them in a box, and then they ask exorbitant premiums for them. Now, when this particular coin was released from the Royal Mint in this particular box, the premium on it was around 50%, so a lot. But then gold prices went up by like 50%. So, and they didn't move the price on this. So when it suddenly became this was a spot price coin, at the time when I bought it, of course, it's a great deal, but they tried to renege on a couple of different other products that were at spot price like this, and we weren't able to get any more of them. But ultimately, that's because they just want to get the money in their pockets. They want to get as much from you as possible. And look, there is a market for collectibles and for collecting. Not going to begrudge premiums. Look, I sell premium stuff, and our poured silver is a premium product at the end of the day. But I'm a business, and I have to make the ends meet. And a lot of other things in business goes up. As I said, inflation is up. Postage costs are up, business costs are up, my manufacturing costs are up, energy costs are up, hallmarking charges are up, postage to the hallmarking is up. All of these things factor in to what ultimately, like raw material costs are up as well, of course. All of these things factor into what ends up being a product and a premium. And I'm not trying to begrudge a company for making a product that goes at a premium. When you make products that are 1 gram gold bars in assay cards, all of the things that go into making a product like this add up. And so you can't sell this at spot price. Totally understand that. Absolutely fine. But when you get products that are double the spot price, triple the spot price, because they're being targeted and pressure sold to older people who don't know better, that's, in my opinion, not great. When you get fractional bits of silver, which are at 4 times the metal price, sold as the next greatest thing since sliced bread, that's not a good thing to look to buy. Certainly, there are questionable ethics involved in that. All about profit, all about money for those companies that make them and sell them. Invested interest is essentially what's going on. So yeah, have we got it all wrong? I don't know. In conclusion, ultimately, we're not the ones that are going to be making the most money out of the world of gold and silver, because ultimately, I can't get both of these trays on camera. There we go. We'll just have one. Ultimately, it's not going to be us that are in the gold mines making the money. We'll get a share of it. We'll see the profits increase over time. But what I will say is, from my history of being a seller of poured silver versus an investor of poured silver, investor in gold and silver and a trader in poured silver, depending on where the prices end up, you can make more money just holding the stock than you can from selling it. There's definitely a way that we can make money as sort of investors in precious metals, but ultimately you make more money if you sell. You make more money if you trade along the way. And having spoken with and talked with various different bullion dealers about how the market's been over the last year, that has been fully evident. They've just exploded in volume, and of course that means their profits have gone up as well. The sustainability of that is on a lot of bullion dealers' minds right now as to where that will be. And you see, in fact, there was a lot of deals that went out last week. The Royal Mint came out with a deal saying just £4 premium over spot price for their Britannias. Really interestingly, though, had an email from somebody who said that they tried to take advantage of that offer by adding various things to their basket, and the Royal Mint's website couldn't calculate that £4 premium. It was all wrong, which I thought was hilarious. But that's kind of the Royal Mint. They don't know their arse from their elbow at the moment. But there are other dealers, not specifically sponsored by them in this particular video, but I'll shout out Chards, because they had a deal which was, I think it was £2.50 over spot price as a premium on the Britannias, on silver Britannias. There's VAT to add on top of that, but by a vast margin, they were significantly cheaper than the Royal Mint or any other mint that's out there, or any other competitors out there for that period. And that's good. That premium reduction is going to drive competition to the market to bring premiums down. And that's a really important thing, because premiums ultimately are paid for by us, whether it's de facto through a dealer because we're selling secondhand stuff to a dealer and the dealer can take advantage of that and sell on the secondhand market for a higher price. Ultimately, we're the ones that pay for that. So my job as an intermediary seller, as somebody who helps people buy and sell at decent prices, I'm going to do a quick shout out at the back end of the video. If you've been watching 18 minutes, then you're super cool. But if you've got stuff to sell, we can get you better prices than if you sell to a dealer. And the idea is that we get the buyer a better price compared to if they buy from a dealer. That's the general metric of it. But we benchmark our prices about what the price is that you will sell to a dealer and what you'll buy to a dealer. And you've got to understand this one single thing. So I'm going to put two lines up here. If we imagine the gap between the two boxes is the center point where any given price is, what bullion dealers do is they don't do this. They don't increase their premiums, but don't change what they pay. They have the same spread, but they move it up and down. So if you imagine this V here, this is spot price, okay? So what they do is they have a buy price under spot price and sell price above spot price. When the market dictates that they need to increase their premiums, they tend to pay a little bit more for their purchases, but their premiums are higher. When the premiums are lower because there's less demand, they pay less and they charge less. So you'll see that happen all the time. Occasionally those will stretch, occasionally it will go one way or the other. It will go one way first, then the other way second. But generally that's how it works. It's just a really fascinating world, and I think one that we somewhat have got wrong as stackers. We think we're all okay. We're the lucky ones because we've managed to buy some of this stuff, but the lucky ones are the ones that sell it. So just be buyer beware is, I guess, what this video, the conclusion to it will be. God knows if any of you are even watching to the 19th minute of the video now, but if you are, thank you for watching. You are super cool. For the cool kids, what should we get you to say today? Shall we say, let's go. Why is the Royal Mint always more expensive than its retailers? I don't understand. I've never understood that. Well, I do understand it. It's because the Royal Mint are greedy and they want to make as much money as they can out of their trusted brand status and the fact that they're probably first in Google search terms when you Google buy gold and silver. But why are they more expensive than everyone else? It's very strange. That's it from me. Thank you all for watching. We will see you on the next video. As always, make sure you like, share, comment, and subscribe for more.